I'm with Dr. Roger Sexton, Chairman of the Beston Global Food Group. Morgans is delighted to be a co-manager of this IPO. The shares are being listed at 35 cents and we're looking to raise over $100 million. This money is to be invested in assets and businesses which are going to take advantage of the growing demand for food and other products, agri-products in China and other Asian and Middle East countries. I also am pleased to have with us Belinda Moore, who is the agri-food analyst for Morgans.
Well, Roger, thank you for your time today.
Pleasure.
And I note the Beston Global Food Company is really leveraged to a very high growth sector, a sector that's received a lot of interest from investors. And I'd just note the agri-food sector has outperformed the broader All Ordinaries in the last couple of years. Mm-hmm. Why have you chosen to invest in this sector? And in particular, I suppose you've chosen 4 key growth subsectors.
I was aware, Belinda, of obviously the debate about the dining boom in Asia, and I have a long history in agriculture, starting from the time that I graduated from high school, actually. And I just felt that there was an opportunity to do it better and focus on not so much the dining boom, but the opportunity to take foods out of Australia to become the delicatessen of Asia.
What is the strategy behind Beston in developing a supply chain solution across these 4 sectors? This strategy is obviously allowing Beston Foods to capture a margin across the supply chain, I would imagine, Roger.
Yes, Lee. What I want to do is to build a comprehensive model. I've seen a lot of food companies go into Asia, and a lot of them have tried hard, but their endeavours have ended in tears. So what I wanted to do was to make sure that we had not only security of supply for the companies that we're taking to Asia, but also that we had our own marketing and distribution, because they're the 2 areas where you can come to grief. Either you can take an order and then find out you can't supply the size of the order that's delivered, or you get into a distribution chain where you're competing with others, and unless you pay the right margins and fees, you find that your product's not being distributed. So I didn't want to have those problems, so we've locked up our own supply and we've locked up our own marketing and distribution.
And Roger, I suppose across the 4 sectors being, dairy, beef, seafood and health, what individual businesses in the portfolio are you most excited about, where you see the biggest upside, taking a 3 to 5 year view?
I think the biggest opportunity, I love all the 4 areas. I think they've all got great potential, but the one that I think has got probably the most upside in the longer term is the health food area. The company that we invested in, Neptune Bioinnovations, has been focused on producing natural products to add or to supply food manufacturers. But what we're doing is taking those products into the retail space, and I've seen the huge growth and demand for health food products in Asia, particularly in companies like Blackmores. I think that's an area that we really have some potential upside, significant potential upside.
Roger, over many years with your involvement in Asia and the Middle East, you've developed some very strong relationships. I note, for example, Dashan Group, a leading retailer in China with over 200 stores, is forming a relationship with you for distribution. Could you explain the strength of that relationship and how it would advantage Beston Foods and shareholders?
Thanks, Lee. One of the things we did was decide to focus our endeavours in China in Dalian, which is the largest port in China, and in the process of establishing in Dalian, we took over a company called Dalian Food Expo, and through that process we had obviously a lot of discussions with the provincial government, and the government decided to set up a green channel for us to expedite our products through customs and quarantine, so we fast-tracked, and then that resulted in the party secretary of Liaoning province and myself being on national TV, and from that we then had a visit within 24 hours from Dashan saying they'd like to be an investor in the company and distribute our foods through their supermarket chains in China, which are substantial. They have something like 260 supermarkets, and 70 of those are what they call their gourmet supermarkets, the Michael stores. So they want to take our foods and feature all our products in their Michael gourmet supermarkets.
And Dashan Group, I understand, has taken a 15% interest in Beston Food Group.
Correct. They did want more, but we've limited to 15%. Yeah.
Well, Roger, that's a great endorsement. We hear a lot about Asia really valuing, brand Australia, our quality, premium traceability, importantly, our safe image into this region. How willing do you think they are to pay a premium price for that?
There's been lots of studies done, Belinda, that show that they are prepared to pay a premium. And we have developed a seal, we call the Blandlock seal, which we put together with a public company called Datadot, where we'll be able to do track and trace and assure the customers in China or anywhere else in Asia that the product they're about to eat is food safe. So we can track the milk when it comes out of the cow, show what's been added to the milk, and verify that the cheese that they're about to buy has no impurities in it or additives which are not natural, and it's safe to eat. And we think that will be it's unique for Australian companies going into Asia, but we think that will be a key selling point for consumers that are looking for safe food.
Roger, I note that in some cases you have 100% control of the asset or the business. In other cases it might be as low as 20%. Obviously, some people might wonder why you have such a small percentage interest in some of these businesses. Could you explain the advantage that still accrues to the company and to shareholders by having significant but smaller stakes in some of these assets and businesses that are in Beston? Sure,
that's a good question, Lee. The key reason is that we didn't want to take away the entrepreneurial spirit that's inherent in these companies. Most of them have started from nothing and developed over a period of 20 years through the entrepreneurial efforts of the owners, and we didn't want to take that away. So we've taken positions of between 20 as the smallest, most of them around 36 to 40%, with the right to go further over time. But importantly, the supply to those companies, or where we've taken locked up supply, it's been with 100% ownership. So we own 100% of the farms, 100% of the lobster quotas and so forth. So 100% of security of supply, and the same with marketing and distribution, 100% ownership of the marketing and distribution. So it's only the bit in the middle, which is the production assets, where we have ranging shareholdings, but as I said, we have the first right to move to 100% at the appropriate time if they go to a sale or if we go to an IPO.
Beston Global Food is going to be managed by Beston Pacific Asset Management. Could you talk us through that management structure and the fees and the performance fees that are associated with this?
Sure, happy to, Lee. We've done a number of other, we put together a number of other companies in the past, and we've taken the view that, and our philosophy is to align our interests very much with the shareholders. So the management fee in this case is 1.2%. If you put some salaries against the people involved in running the company, you'd quickly see that the 1.2% doesn't cover the cost. So our interest is in the performance fee. That's where we get rewarded, and all of the individuals that are running the management company have come on board at below market salaries. As I said, that's the way we've run it before, and we've been successful in building companies on that basis. Our performance fee is 17.5% of the outperformance over the All Ordinaries Index, and that gets assessed annually and rewarded not in cash, but it gets rewarded in shares. So we go into the market and buy the shares. So we're totally aligned, we believe, with the shareholders. So the cost of running the company are much less than if it was a public company with all the normal costs that would go with paying market salaries, and the staff get rewarded from the performance fees, which say are paid in shares. So the alignment, in our view, is very much with the shareholders, that we win if the shareholders win as well.
Well, Roger, it's good to see that's a win-win situation for all. But at Morgans, we believe that the Beston Global Food Company is really a great way for our clients to access a diversified agri-food portfolio across all those key growth subsectors, being dairy, beef, seafood and health. we think there is significant upside for Roger and his team to grow the earnings for each of those investee companies by putting more throughput through the manufacturing facilities, which will see significant fixed cost leverage and earnings falling to the bottom line. But it also, his team offers really a world-class customer base in the key growth markets of Asia and the Middle East. So we see, substantial earnings upside over time. I'd also note that Beston Global Food Company offers investors an attractive dividend yield of about 5%. So if Beston Global Food Company is of interest to yourself, please contact your Morgans advisor.